Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hour Show. We are here with a lot to report today. The market just went in the wrong direction. It is falling. The structure of this December market is completely different from the structure that we had in last year's market. So it looks to be that the Santa rally just isn't going to materialize. But of course, we'll have to wait and see how this all plays out. The market itself is getting to the point of oversold, and that's got to be a short-term bottom of sorts. Maybe not a long-term bottom, but maybe a short one. We'll have to wait and see how things go on Monday and what happens over the weekend, because today is Friday and it's the last day of the market being open for this week. So we'll have to see how it all plays out and what news comes out this weekend. What's going on in Congress, what's going on with COVID. Oh boy, and not lockdowns again. Oh, this has the market on very shaky legs, and the market is really nervous right now. Yesterday, we had a nice bounce back, but of course, it was short-lived. It was for a day, and now we're falling again. But here we are at another live stream. But I just want to make sure the most important thing is what's on your mind. If you have a question, leave your ticker symbol and your question in the comments. We'll go over it live during the show. We'll look at the stock chart. We'll look at the financials. We'll talk about the company. Now, we can say that, yes, a company is looking good. This looks like a good entry point, but we also have to take in account what is the overall market doing. Because you can have a company that does wonderful on its recent earnings report, has a nice setup on the chart, but then the market conditions can change and it can drag that very good company right down with the rest of the market. So it is something that we do have to be careful with. So with that being said, I want to know what's on your mind. I want to talk about what you're thinking about. What companies you're thinking about trading, investing in for the long term, short term. Just let me know in the comments. I'm looking forward to our conversations today. With that said, I'm going to jump right into my opening monologue, and then I have a special announcement that I want to bring up and talk about just for a couple of minutes. But yeah, I'm gonna go through the opening monologue just like normal. The chat is open. I'm watching for your comments, so let's just get right into it. So today, we all know the stock market fell sharply amid mixed economic data, along with a series of hawkish remarks by the Federal Reserve officials. While fears over the new COVID variant, Omicron, mount in Congress, the House and Senate did pass a continuing resolution to fund the government through February 18th of 2022. A stronger than expected ISM report reignited fears of inflationary pressures, and it was rising interest rates as well. At the same time, the U.S. economy recorded its smallest job gains this year of 210,000 versus the expected 550,000. Although the unemployment rate did ease more than expected to 4.2%, while the labor force participation, well, that rate ticked up to 61.8%. The tech-heavy NASDAQ plunged as much as 1.9% on the day and 2.6% on the week to the lowest level since October 18th. It was dragged down by Apple and Meta Platforms' losses. The iPhone maker slipped on news that at least 9 U.S. State Department officials or employees had their iPhones hacked. Meanwhile, the S&P 500 dropped 0.9% on the day and 1.2% on the week to trade during the session near levels it has not seen since October 15th, amid a sharp fall in big tech stocks. Still, the Dow Jones slipped 0.2% on the day and 0.9% on the week, partially offset by last session's gains. Small caps fared even worse. The Russell 2000, well, it dropped 2.1%, and it fell 3.9% for the week. 8 sectors ended the day in negative territory, while 3 losing 1% or more. The consumer discretionary sector, down 1.8%, finished at the bottom of the leaderboard, right behind technology, down 1.7%, and financials down 1.6%. 1.5%. Growth stocks were among today's biggest losers. We had companies like Microsoft, Nvidia, Amazon, Tesla. They all fell between 1.4% and 6.4%. Nvidia's underperformance followed news that the FTC sued to block the company from completing its $40 billion acquisition of ARM Holdings. The CBOE Global Markets reported their November trading volume statistics today. Total options volume across the CBOE's 4 exchanges was 285,663,721 contracts for November, the highest volume month on record, and up 32% from second place, which was November of last year, 2020. Okay, that's a recap of the market today. Now, I did say I would get to the special announcement that I had, and here we go. The special announcement. We want to structure and build this out to be a business. We want to hire journalists to do actual on-the-ground reporting about our favorite ticker symbols, the companies that we all care about the most. This type of work is not done today, and it will change the caliber of information we all will receive. Because today, it's just a company sends out a press release, and then a reporter basically copies and pastes the press release and then posts it on a website or reads it on TV. We want real people going to the factories, to the headquarters, and investigating our favorite companies, taking pictures, talking to the people who actually work there. But we cannot build this without your help. So, Patreon members, there is a special link. It's the first link in the description. It takes you to our Patreon page. We have set up a very special tier for those who want to be a part of building this business. Of course, every single tier that we have in our Patreon account is special, and it does help with our research, our analysis, our technical breakdowns, and there are benefits for Patreon members as well. Trade setups, buy-sell signals for Bitcoin, Ethereum, stocks, advanced analysis on our favorite ticker symbols, trade ideas, and the list goes on. But the most important thing is we want to build a business. We want to hire actual on-the-ground reporters. We also want to hire researchers, because researching these companies is very time-consuming. As you know, when you do your own due diligence, it takes time. And you can go down a rabbit hole with some companies, and it can end up taking hours when you reach the other side. But we want to get the best information into your hands. And the only way to do that is to build this as a business and actually hire the people, the journalists, to go to the Tesla factory, to take photos of the lot, to see how many vehicles are being produced. for a journalist to go to the headquarters of a company that we want to invest in and interview the CEO, or a researcher to go down the rabbit hole for special companies that we all want to invest in. And we want to hire the best of the best, and we need your help to do it. So that's the special announcement that I had, that I wanted to share with you, that we are setting this up as a business so we can offer the best information possible, and there's a way for you to be a part of it as well. So check out that first link in the description, and as always, share your thoughts. Let me know in the comments what you think about this. Do you think it's a crazy moonshot idea to even try to do this? Or do you think there would be real value in having actual reporters on the ground, more researchers? Let me know what you think. All right, on the chart here, we've got the S&P 500. Now, earlier we talked about defensive stocks and the S&P 500 and the structure that it's in this year compared to last year. And the two purple circles, one on the right side, one on the left side, you can see they are completely different from one another. The structures are different. So let me zoom in here on today. Now, yesterday's bounce was nice because it put the S&P 500 back above its 50-day moving average. And that line is so important. We talk about it in every live stream. I'm sure you can repeat with me. If a stock is above the 50-day moving average, it is a positive and bearish signal. If it is below the 50-day moving average, it is a negative or bearish signal. Yesterday, the S&P 500 got back above the 50-day moving average. Today, it's very interesting because it closed right on that 50-day moving average. The wick of the candle got below it for sure, but the candle itself closed right on that 50-day moving average. So that's why this market is so antsy, right? There's a lot of anxiety in the market right now. It wants to remain bullish, but it's being dragged down by fear, uncertainty, and doubt. All right, so I just wanted to point that out, that it's hanging right there on the 50-day moving average. Let's go to Bitcoin, BTC USD. It fell today as well, but very interestingly, it is staying within its wedge pattern, even with its fall today. We can adjust this line to bring it out a little further here, just like that. And we can see that the candle is still within this wedge. Now, the candle wick did protrude the bottom support line today, but it is back above it right now. And as long as it closes above this area right here, which is about 52,600, give or take, then that's still an okay structure that it's in, because this falling wedge pattern typically leads to a move to the upside. Now, right now, Bitcoin is at 53,467 right now. All right, it was down 5.3% today. Now, Ethereum, ETH USD, did a little worse today. Get the chart loaded here so we can all see this together. It is at 42.24.25 right now. Now, Ethereum, it had broken above its resistance line, and it held above there for a couple days, but now it has fallen back below that support level, and it is now down to this line right here that is right at 41.90. This line acted as support on some days. Other days, it acted as resistance for the past 2 weeks for Ethereum prior to it breaking above its resistance line. So I do find that interesting. That's holding around that same area of support. It did fall below its 50-day moving average today, which a lot of things did. A lot of companies fell below that all important moving average. Okay, I've got a couple of companies to move through in rapid fire, and then I've got some deep dives that I want to do on a few specific companies like Docusign and Zillow, because it looks like Zillow has got some positive news. All right, first up is Roblox. Ticker symbol is, let me get my bearings here, RBLX for Roblox. Now, the reason I bring them up, they have been moving very nicely. They had broke out of this symmetrical triangle here, a really nice breakout, and it just ran and it was on fire. It got to a high of $141.60, which was a 52-week high for Roblox. Now, Roblox is closed today above its 21-day moving average, which is still very bullish. It's still a very positive structure. Now, it was down 2.6% today. It had a nice little run yesterday of 3%. Day before that, it had dropped 10% because it just went up so fast. And when stocks go up fast in a short period of time, then they usually come down very fast in that same short period of time. And that's what happened here with Roblox in this breakout here. So it's coming back down. But the reason I bring them up is because Roblox has a bullish options on that stock right now. And it is specifically on the December 9 120 call options. It is a very high percentage. So it's a bullish development. Now, the options market, it can give you insight to where a company may be going. But remember, technical analysis, fundamentals, the options market, all of these are different data points. And you should treat each one as just a single point of data. It by itself doesn't mean much. But when you can start connecting several of them together, that's when your investment thesis starts to materialize. Okay? So just keep that in mind. Another one is Upstart, UPST for Upstart. They had upgrades today. One was a upgraded to buy from neutral, and that was Citigroup, with a price target of $350. Now, Upstart has fallen from its recent high on October 15th, where it had set a 52-week high of $401.49. It had broken that $400 level. And now it sits here at $172, $171. Now, what's interesting about Upstart today is that it came down below and closed below its 200-day moving average. That is a bearish or negative signal that you should pay attention to. Yesterday, it tried to get back above its 200-day moving average, and it couldn't. It closed below it again. So paying attention to these lines is important because other investors and traders do the same. Many probably thought that Well, it's coming down to its 200-day moving average. That would probably be a good place to add to a position, open a position, start a position in Upstart. Well, it came down below that today and closed below it for the second day in a row. So this is an example of a company that is doing the right things. It's moving in the right direction, but the overall market is now starting to pull it down, right? It's like a sinking ship, and all the rats try to get up above it, try to climb up to the highest peak, and the next one climbs above it, and the next one climbs above it. Everyone's trying to get back to the top, but the ship is pulling it all down. That's what's happening here with Upstart, because Upstart had a very nice bounce on November 24th, continued it on November 26th. After it had fallen, this gap down from earnings, and it fell out of its trading channel, when it got down here to its 200-day moving average, this was actually a pretty interesting spot to get in. Because there was, even though the company has not been public very long, there was support at that level. Now, the next support that I have is at 166, and then below that, well, we're going to go to 107. So there's a pretty big gap that Upstart could fall if the market continues its downward trajectory. And that big gap here for Upstart is because there's no support there, because it gapped up and completely missed this area. So there's nowhere that we can look back to and say, oh yeah, there's support here. We have to go all the way back down to $107. And if it drops another $65, that is a very steep discount. Have you looked at Facebook? Yes, I did. I mentioned Facebook at the very beginning here. I'll pull their chart up. Just, man. We talked about this yesterday. The 200-day moving average, just like for Upstart that we were just looking at, where we think, okay, other investors are going to see this exact same thing, so they're going to buy in now too. Well, since the overall market is now in a very negative and high anxiety mindset, the whole market can just pull a single company down, even though there was plenty of support at the $324 level for Facebook. There was lots of support. We circled all of them. There was lots of support, but it broke that support, and it came down. It actually came down to this support right here that is right at the $300 mark. Now, it did bounce off of that today, so it is up higher than its low on the day. I believe it got almost down there, 299. So it broke below that $300 barrier today. It got to 299.50, and it's now back to 306. So it's off those intraday lows. But yeah, and right now the RSI is at a 29, so this thing is technically oversold. 30 and below, oversold. So could Facebook continue falling? It could. It looks like, though, it's going to have support at $300. That's where everyone who's doing any sort of technical analysis is going to say there is support at $300. And we can go back and look at the different touch points here on a line. And what makes a line support? Touch points. Whenever candles have touched that line before and bounced off of it, that's what makes it a support line. And we have right over my head here, we've got several, 1, 2, 3, 4, 5, 6, 7 different, nope, 8 different touch point, nope, 10 different touch points, ranging from March to May of this year at the $300 mark. So that would be an area of support. But support lines and resistance lines, they're not set in stone. They're not a wall that can never be breached. They are temporary in their holdings because old support lines can become new resistance lines. Old resistance lines can become new support lines. They swap and flip places all the time. That's why with investing and trading, specifically trading, you're always updating and evolving your trade strategy, your investment thesis. You're constantly updating it, evolving it, changing it to match with what's happening with reality. So yes. Another company that did really good, and it had a bunch of upgrades today, and that's MRVL. The ticker symbol is MRVL, Marvell Technology. They had a blowout earnings yesterday. The company was up 17% today. It is flat in after hours. I mean, just look at this. We last night when earnings came out, we talked about this. I put this purple circle up here to show you where it was in after hours. And yeah, the candle formed right there in it. Let's see here. Thanks for going back. Just subscribe today. Look forward to keeping up with your content. Thank you. I appreciate that. Live stream every day. My most important video comes out Sunday evenings. I do a live stream to talk about what stocks are set to move in the upcoming week, and that could be moving up or potentially moving down. It's an important video, and of course, all of our videos are for you. If you ever have a question on one of our live streams, just ask it, and we stop what we're doing, we go and answer your question. That's what we're here for. And like I said, the onset of this, we're going to build this into a business, hire the field reporters, hire the researchers to make the information the best and most accurate that it can be for you. So that's what we're doing. Okay, so Marvell, a bunch of upgrades today because of their awesome earnings last night. I'm going to get into this company a little deeper in just a moment. One of the upgrades was an outperform from market perform, and that was from Cohen, and they raised their price target to $100. So you've got an extra nearly $18 that you can move here. That's pretty darn good. I mean, especially since it just went up 17%. All right, going to the negative of it, we've got Docusign, ticker symbol DOCU. They had a bunch of downgrades today. One to neutral from buy from USB, and they lowered their price target to $170. And you may say to yourself, $170, and that's lowering their price target. Well, it's now at $135. Well, that's because there is potentially some upside to Docusign here, because there was definitely a pretty big overreaction to this. Docusign being down 42% today, there were a lot of what's the word to use? Algorithmic people who have set stop losses, whether trailing stop losses, a fixed stop loss, they got triggered one after another today. And that's what helped this thing sell off so much. It is oversold right now. It's at a 22.26 on the RSI. That is totally oversold. So there was a big overreaction in Docusign. Now, with the overall market conditions, it could continue to pull it down some, but I think there will probably be a little bit of a bounce on this one, just because of how far and how quick it sold down. But I'm going to get into this one a little bit deeper. Do you think Nvidia will fall any further when markets open on Monday? Okay. I don't really like to, NVDA is the ticker symbol. I don't really like to look at short-term predictions because they can be wrong more times than they are right. And that's just because we don't know what the overall market is doing. We can have our investment thesis on a particular company. We know the company is solid, like Nvidia. Nvidia is a solid company. We know that Nvidia will continue to produce. We know that Nvidia will continue to expand its capacity. Right now, though, with Nvidia, there's the news that the was it the FTC? It was one government agency. I can't remember which government agency, but they sued Nvidia to block them from the $40 billion ARM deal, saying that there's too many monopolistic signs here for it. Let's see if I can't find that note right quick. Let's see here. Is that no? That's not the note. No, I thought that note came out right. Is this it? No. Why can't I find that note? No, I know I saw it. Now why can't I find it? Interesting. Okay, I'll have to go back and look a little further. But that provided a lot of selling pressure today. Because if that ARM deal doesn't go through, then that will prohibit some of Nvidia's capacity to grow. Now there is on the options market today, because of that note, there is a very high put call ratio on Nvidia for the $300 mark, and it's at 306.50 right now. So there are a very high number of puts, 300 puts on Nvidia right now. So that's going to help to provide more selling pressure on Nvidia. With the implied volatility, we're looking at maybe another 5% move here down, based on options information. So the implied volatility is about 51% right now for that 300 put option on Nvidia. So that's a very bearish activity for Nvidia. So that probably will not help for Monday. Now, if more information comes out about the Nvidia and the ARM deal that are more positive than today, then that would help ease the selling pressure. I don't know why I can't. It's not on the wire service. I must just have missed it. Okay. So Nvidia right now is really high, and it's out of its trading channel. I think Nvidia will continue to come down. I really do. Because if you look at this trading channel that it's been in, we can go back to March of this year is when Nvidia started trading in this trading channel. And you can see it's got a very defined bottom, and that 50-day moving average has been skirting right along the support of this trading channel. And there's a very defined top of this trading channel. When we got here just before earnings on November 2nd, it broke out of this, a lot having to do with talk about the metaverse. It broke out of this, it ran up, it sold off a bit, then it gapped up even higher and ran to a 52-week high on the 22nd of November. And that was $346.47. That was a 52-week high just a couple weeks ago, about a week ago. Yeah, just over a week ago. And now it's been holding up here, but I do believe the selling pressure will come in. I do believe that Nvidia is going to come back down to this trading channel, especially to get closer to that 50-day moving average. I could totally see that. I don't think it's all going to happen at once on Monday, but if you look at where it's at right now, for it to go, if it just went straight down to that trading channel, that is a 11.6% move to get back to that trading channel. If we spread that out over a few days because it's ascending, then we're looking maybe at an 8%. And what were options calling for? A 5% move? So I could see that. I could see another 5-10% fall for Nvidia because it is stretched out right now. If we look at the RSI, though, it's at a 54.37, which is right in the middle. It's not oversold because that would need to be 30 or below. It's not overbought because that would need to be 70 or above. So that's where Nvidia sits right now. And if you look at volume, this whole ride up to the new all-time high, volume has been increasing. Today's volume, well, let's look at yesterday's volume. Yesterday's volume, Nvidia bounced and was positive 2.2%. And that was on volume of 47.2 million. The average volume is 54.8 million. So its bounce yesterday of 2.2% was on lighter volume. And today's volume was just a slight hair above average. It was 54.3 million, while the average had come down a little bit to 51.8 million. So right there with its average, but it's been ticking up. Point being, Nvidia was down 4.6% today. I do believe Nvidia is going to continue to come down to at least its 50-day moving average, which if we drew a line, because it's not going to happen all at once, this 50-day moving average will probably continue to move in a direction similar to this. I wish it could curve. If that would angle a little bit, that would be a little bit better. Because the 50-day moving average is going to continue to rise even though it's falling because they need to catch up. There's been a major divergence going back to October 29th when the actual price and the 50-day moving average started to separate. There was a divergence there. Now they need to come back together and bounce off of it, hopefully, and not sink below it. But it could, because then at that point, if this goes out to the end of December, for it to get all the way back down to its 50-day moving average, then that 50-day moving average is going to be out of this trading channel. So that's my thoughts there on Nvidia. Again, I don't really like to look at things short term, because there's so many different factors that you have to take into account, and the market is very fluid. It moves a lot, and trying to time the market is impossible because the market is fluid. That's why trying to make a single prediction on a single day is impossible to do, because of all the different factors, all the different data points, and that the market's fluid. Okay, so I hope that answers your question on Nvidia. It's not going to happen all at once on Monday, but it is going to continue to come down, I believe. Let's see. Do you think Square will fall any further when the market opens on Monday? Okay. Same point I just made with Nvidia and trying to make short-term predictions. It's impossible. But let's look at Square and see how it is technically on a technical structure here. All right. So Square, one thing to point out, the fintech area, it's been falling. You look at Square, you look at PayPal, you look at Visa. Some of these companies in this fintech area have just been hurting really bad. Square's no exception. But one thing interesting here about Square in its fall, I'm going to measure from this high right here, which was right at 200 and let's call it $290. To where it is now is a 37.4% discount. Now, Square direct competitor would be PayPal, right? Square is more overvalued, in my belief, than PayPal is. I think PayPal gets you a better deal on a stock over Square. Square right now is at a 19.6 on the RSI, which is really oversold. So that's something to point out. And of course, others are going to be watching that as well, that it's being oversold. However, I will say, with them missing on earnings, even though it wasn't by much, they missed by 2% on EPS, which was not even a penny, less than a penny, and that they missed by about 500 million on earnings on the revenue side. Not a big miss, but it's something that you have to keep into account. A lot of people are short-term thinkers with the market, and they'll fall for these little whims that it missed. Oh no, I guess that means sell, right? Well, not necessarily. Square being down here, let's take a look at history. And see, right now, there's just not a lot of support to help Square. And that's why I believe the past couple of days it's fallen so hard, is there's just not a whole bunch of support. Because when we go back here and look, it it ran up. There was a nice rally, but there was no back testing. There was no countering to form support levels. So I think for a base area here to form, we're probably going to have to come down maybe to, I don't know, maybe to 155 to really get some support. 170 being the highest there. So let me put a zone here. I would say the top of the zone is probably around 170. Let me change that color. But then the bottom of this zone is probably around here. I'm going to put it about 150. So that's probably the next area of support that square could fall to, is in between there. And I'll leave these lines here so we can come back and check it in the future. So that's in between, on the high side 170, on the low side 150. In that zone, you could probably find some type of support. And what did the volume look like back here? So back when it was in this zone, you had a volume of 4.3 million. I mean, right now, volume is way higher than 4.3 million, compared right now to 13.4 million. So volume is way higher right now. And again, there is no support, and that's why this thing has fallen so quickly. So I hope that helps on Square. I think it might continue to fall. But this zone in here, again, 170 being the very top of the zone and 150 being the bottom of the zone, it could find support in that zone. All right. Let's see here. Thinking about setting up a CSP on HPE at the $14 level. Looks good. You think after earnings, $14 is still a good target. All right, let me put HPE up here. I talked about them in a little greater detail the other night. I hadn't had a chance to read through their earnings, so I posted an individual video about it. They did pretty good. They do have some supply constraints that they need to deal with here. All right, there's my lines. All right, so we had this drawn out for HP, Hewlett Packard Enterprise, HPE. We had support here at about 1435, and then there were a couple other lower support levels, and then we had a base floor at around 1250. Now, I think, again, depending on the overall market, if it wasn't for the market selling off today, HPE would have been up more than 1.2%. The rest of the market held this company down. You know, like a ship at anchor. If it wasn't anchored to the market, it would have gone up much further. But we went from a bounce and buy the dip mindset yesterday to which was a risk on environment, to a risk off environment where we want to take money off the table and save it for buying the dip, the next dip. because it had a nice 5.4% move yesterday. Now, here's what I find interesting about its setup. It is sitting right here on its 200-day moving average, all right? Yesterday, it got right up to the 200-day moving average, and that acted as resistance. That usually happens. Today, though, it broke through that resistance, which again is a typical move, and it closed above that resistance, which is a very good sign. So your question here being at the $14 level. Yes. There is some support here at $14 even. For me, I like to do zones instead of saying, okay, $14 and that's it. That's the point right there. I prefer doing a zone like maybe $14.50 to $14 just to cover it. But there, right at that $14 level, there are a lot of reactions. There's a lot of candles sitting right on that line here recently. And we've got December 1st, the candle closed right on it. You know, this is a daily chart too, so every candle is just one day. We've got September 29th when it bounced off of it. We've got September 28th when it closed right on it. So these are all very positive. Yeah, $14 looks pretty cool. But you're asking if it's a good, still a good target. As far as if the market lets this thing run, we're going to have to look at, okay, so what are the levels this thing extended to? And we don't want to look at hyperbolic areas because it's not going to go on a run like that. But if we look right here at this, almost at $16, almost right here at $16. It's really just below $16. Let's see. Yeah. I'm going to put a line right here, and I'm going to change the color on it. I think this is where it could end up going. Not within a day. But maybe over this month. I don't know short term because the market is just, it's so depressed and anxious, and it just doesn't know what it wants to do. So I think HPE could go up to the $16 mark. And if we measure where it's at right now, which is 15, 17 up to 16, that's a 5.39% move to get there, which is totally reasonable. It could totally do that. All right. So yeah, there it is. So you think buying 100 shares and playing both sides? I think it's going to have more pressure pushing it up than pressure pushing it down, quite frankly. Just because its earnings were so good. So let me look at these other two things here. If we're looking at volume just since earnings, it's going down. Here, let me put a line on this. So earnings to today. So earnings are in a downtrend. RSI is right now, it's at a 49.3. And on earnings, it was at a 41.6. So it's gone up 9 points. Not a lot. So these two are converging. We go from earnings. Oh, that's not what I wanted to do. I want to draw a line here. If we go from earnings on the RSI to today, it's moving up. So these two are converging. With volume going down and relative strength index going up, this is going to provide upward mobility for the stock. That would be my belief on how it's going to move. But then again, the overall market is going to put a lid on this thing and try to hold it back. And if it wasn't for the market, it would be up more than 1.2% today. That's for sure. It could have been up another 5% today, like yesterday. All right, so it's really tough just because of how emotional the market is right now. And you know, the market is always overreactions and it's always emotional led. But yeah, so that's my thoughts. I think it could creep up here to the $16 mark. If the market conditions don't change, it's going to take it some time to get there. I think it may move sideways, but I think it's got more upward mobility than it does any downward mobility or any selling pressure. I think it's got more buying pressure than selling pressure. Just my thought. Again, take my thought as another data point. Use it with your own DD. Not financial advice, of course. Do your own thing, but yeah. Let me see what if there's anything noticeable in the options market for HPE. Yeah, it's good to ask the questions and then, you know, get the feedback. And then if it's something that fits into your investment thesis, then that's good. Just again, just use it as another data point, just like you take technical analysis and use that as a data point to form your opinion. Just use my thoughts as another data point too. Because I'm not always right. I'll be the first to admit it. No, nothing. Right now, the implied volatility is pretty low on HPE. So that, and again, low volatility, it won't move much. All right, cool. Let's see what, where do I want to go next? Let me look at my notes here right quick. Zillow. Yeah, I did want to talk about Zillow. Of course, if you guys have questions, feel free to leave them in the comments. I'll gladly go over what you would like to talk about. All right. So I'm going to jump into Zillow here. All right, ticker symbol for Zillow, ZG, and you also have Z as well. Both of those ticker symbols are for Zillow. Now, of course, Zillow has been in a downtrend since reaching this high back in February, where a lot of growth companies hit a high back in February, and it has just been selling off all year. And then we got this news about Zillow potentially pausing their Zillow offers, and we got this gap down. It was a smaller one right here. And then we got earnings, and they confirmed that they are ending, not just pausing, but ending their iBuyer program, which they call Zillow Offers, and the stock tanked hard. But today, there was some relief in Zillow. It was up 10.5%. Why such a big move? Well, here's what's going on with Zillow. So, Zillow has been under siege since the company reported its Q3 earnings report back on November 3rd, while also announcing an abrupt end to its Zillow Offers business, which this is the home flipping business that quickly soured on Zillow due to housing price volatility and labor shortages, limiting Zillow's ability to profitably sell houses and causing its home segment to badly miss revenue expectations. Adding to this, there has been uncertainty regarding how quickly Zillow can dwindle down on its home inventory portfolio, which requires ongoing maintenance, debt, insurance, taxes, and other costs. Today, however, Zillow provided some much needed positive news, announcing that it has made significant progress in its wind down effects, prompting it to authorize a new $750 million share repurchase program. And remember, a share repurchase program is where a company is buying its own shares off the market and taking those shares off the market, which provides pressure to push the stock up. It's a way for a company to reward investors. It's the opposite of when a company does an offering and it's going to add shares on the market to raise money. That would dilute your shares. What Zillow did today is not any type of dilution. It helps to raise the price of shares. Now, specifically, Zillow said that it has sold and is under contract to sell or has reached an agreement on disposition terms for more than 50% of the homes it expects to resell during the entire wind down process. So it has at least half of the homes in its inventory on some sort of a contract to sell, on some sort of an agreement to sell. So that's good. Investors are basically breathing a sigh of relief at the speed of disposal, which also allows Zoom to bump up its Q4 home segment revenue guidance, in which they did to $2.3 to $2.9 billion. And that's up from $1.7 to $2.1 billion. Furthermore, Zoom continues to expect the net impact of the wind down process to be at least cash flow neutral, even after it repays $2.9 billion in debt taken out by Zillow offers. At this point, it's fair to say that Zillow bit off more than it can chew with its entrance into the home flipping space. Given how hot the real estate market has been, it's easy to understand the draw to that business. But home flipping at scale is probably not a viable model. Although the company's management team has taken plenty of lumps for this misstep. Some credit is due for admitting defeat and deciding to return Zillow back to its roots. One takeaway, or one key takeaway, I should say, from today's news is that this Zillow is closing the chapter of this endeavor quickly and quicker than anticipated, enabling it to move on to other opportunities. On that note, the exit from Zillow offers is freeing up capital that can be used to enhance its platform. Or for shareholders, maybe there's a friendly way that Zillow could reward shareholders besides a buyback program. Maybe they could offer a special one-time dividend. Who knows? The company, I believe, will now focus on its more traditional business of generating revenue through marketing and advertising services for real estate agents and companies to entice more agents to its platform. Zillow is planning to further enhance its platform by adding immersive 3D features for home listings with digital floor plans and improving the process of scheduling a tour. These aren't necessarily game-changing initiatives, but I believe it puts Zillow back on the right track. With the exit from the home flipping business, some may wonder where Zoom's next major growth catalyst may come from. There is still ample room to gain market share in the industry that it's still dominated by traditional retail agencies like Remax, ticker symbol RMAX, Coldwell Bankers, Keller Williams, and many others. Whether that opportunity is enough to satisfy growth-hungry investors, well, that remains to be seen. Ultimately, though, the decision to ditch the home flipping business was the right one and is less painful than originally thought, putting Zoom one step closer to turning the page on this rough stretch. Well, that's my thoughts on Zoom. What do you think about Zoom and it being halfway through selling out on its inventory of homes that it has on the market right now? Do you also see this as a good sign? Or do you think Zillow should have stuck in there and tried to work it out and become profitable at flipping homes? Let me know in the comments what you think. Okay, another company, give me one quick second here. Thank you. I apologize for that. All right. Next up is Docusign, ticker symbol DOCU. Now, this is a company that we talked about earlier. It has gotten hit really hard, down 42% today. In one day, 42%. It had already been in a bit of a decline since August. And right now in after hours, it is flat. It's up a few pennies. So Docusign, it was using its 200-day moving average to find support here in October. I personally would wait till next earnings on Zillow. Yeah, that's absolutely. But I do think, yeah, that's yeah, I am not buying Zillow right now. I guess I should probably add that part when I'm talking about these companies. Zillow is not one that I'm investing in right now or trading. I definitely want to see how this progression turns out. But yeah, definitely waiting until next earnings to see how the company is transitioning away from this and how is it getting back to its roots and what other initiatives are they going to do in order to get back to the way that they were. That's something that's worth waiting to hear, definitely. All right, on Docusign, this 200-day moving average, it was very important. It was acting as support right here back in October. But then here in November, it just fell right through this, and it could not break above it. It turned from support into resistance. I'll forget that bell going off. I forgot to turn it off. Okay, it'll stop in a moment. Okay, on Docusign here, today's big drop, wow. Their earnings yesterday were not very good. So let's get into Docusign. And what do you think of Lucid, my biggest position in my portfolio? I think Lucid is pinballing around right now. LCID for the ticker there. I think Lucid's going to come down some more. It ran up too hot, too fast, and I think it's going to come down some more. I think Rivian is starting to find support at maybe $100 a share, maybe around that area. But we'll talk. We can talk about Rivian if you want to, also, or Tesla even. But yeah, so Lucid was in. Well, first off, we need to back up. All the way back here, October 22nd. I did a video on Lucid, and we talked about this symmetrical triangle, and that Lucid was going to break out of this. I knew they were going to. They had just done it here. Going back to September 15th, and then this was just 2 weeks prior. We had that awesome dip, the awesome buy the dip, when pipe investors were able to offload shares, and this thing came all the way down to what, $16.12, I believe it was the low. And then symmetrical triangle, breakout, symmetrical triangle, breakout, symmetrical triangle, breakout, symmetrical triangle, breakout. Now we got to another symmetrical triangle, but this one, I said no. I said no more. It's not going to go up. It's going to go down. And of course, it did. It fell through on this one. And the past 4 trading sessions have been in the red here. And I believe this is going to continue for Lucid. I think it's going to continue to go down. If we look at the RSI, I already had a line drawn here. I can just continue this line straight out, and you can see that RSI going all the way back to November 8th, which was before another breakout, the RSI started to move down. Volume, and let me put a line on volume. Volume from November 16th to today has also been declining. Lucid had just gotten way too hot, and it is going to come back down. It's going to continue to come back down, and I think it could come all the way back down to $35, quite frankly. That's where its 50-day moving average is at right now. $35.80. Now that I open this up, I can adjust this line just a little bit. Still in a downtrend. You can see the RSI has been in a downtrend here for almost a month now. So it reached its point, and there are no more catalysts for Lucid coming up this year. There are none. Of course, in January, we may have some catalysts. Maybe there's some delivery numbers that Lucid can tell us, but there's no more catalyst. The only thing that could move Lucid up is retail investors coming together and just, buying the dip. That could send it up 5%, 10% maybe, but I think it's going to continue coming back down. It got way overextended. Long term, though, I don't think this is the bottom for Lucid. I don't think this is the top for Lucid. I do believe Lucid will go a lot higher in the long term, but short term, it's coming down, I believe. Let's see here. What's that? Darn, I hope not, but thanks for sharing opinion. I heard Saudi Arabia injected billions. Yes, Saudi Arabia is one of the pipe investors in Lucid. Yes, absolutely. That is true. I must sell some green positive shares to way less. Of course, that's up to you. Oh, yes, long term. Yeah, long term. So short-term view, the stock is coming down. No doubt about it. The whole EV sector right now has run a little hot, and I believe the whole EV sector as a whole is going to come down. Long term, though, I do believe Lucid does have a viable product. They have a lot of big money backing them. And yes, the Saudi Arabia's investing fund did invest into Lucid's pipe offering when they went through their SPAC, the reverse merger. And they invested billions of that. And I believe their price was, the pipe anyway, was around $15 a share. Which is very interesting because when pipe investors were able to share way back here on September the 1st, it got down to 16, what is this? 1612 is how far it got, 1612. So it stayed above that $15. So you've got a lot of pipe investors sold in, but I think the majority are still holding. So yeah, short term coming down, long term going up. How about oil? I lost $300 today in bad trading oil. Oil is very volatile right now. If I look over here, what is oil at right now? OPEC, when they had their meeting, I do believe in January of next year, they are going to increase their production in oil. So that'll help a bit. So oil was actually kind of flat today. It was down 0.3%. It's at 66.24 a barrel right now. Yeah, 1612. What a dream. Yep. I bought the dip that day. I did not get $16.12. I didn't get that low, but I bought that day because this thing was not going to go down to the pipe price. I did not believe that, on number one, and number two, I knew Lucid had many catalysts coming up for this year that were going to kick it off. So, wow, very nice. Good job. Thank you. I appreciate that. I traded Lucid, and right now I'm not holding Lucid. The next real dip that I believe is coming for Lucid, I'll get back in on Lucid. But there's no, the big thing about Lucid is that there are no catalysts for the rest of this year. So there's really nothing for the rest of this month to get investors excited and back in on Lucid right now. Just my thoughts. Okay, I will close my eyes on Lucid and wait 6 months. Depending on your cost basis, you could always dollar cost average. I don't know what your cost basis is. But yeah, when Lucid comes out in 89 days and they have to report earnings, that is going to be very interesting. That has the chance to be the biggest catalyst for Lucid. Let's see. Where's the March the 3rd? Looks like March the 3rd. So mark your calendar for March 3rd for earnings on Lucid. That'll be very important. After we get through this slump in the market right now, I do believe then we'll see another rally, and then of course after that rally, then we'll have to pay attention to earnings, because Lucid will go back up into earnings. But if Lucid goes into earnings and comes out of it negative, then that'll be a negative catalyst and it'll cause the price to go down. But I'm sure it's going to rise once it reaches its bottom in this cycle right here. Then it will rally up through earnings, most likely. No guarantee. No one's got a crystal ball. Okay, feel the same way over SoFi? Oh, I actually like SoFi a lot. I love SoFi. I own SoFi. I buy more when I can. Today being down 7.5%. What I'm waiting on for SoFi is bank charter. Once they get their bank charter, that is going to be one huge catalyst for SoFi. Now, SoFi's taken a pretty big beating. We've been talking about SoFi since it was, I think one of the times we looked at SoFi, we looked at it right here at $21. And Devin asked me if getting in at $21 was a fair value. And I think anywhere between $20 and $21 was a fair value for SoFi. But of course, anything lower is better, of course. But I think the bank charter news is going to be a huge catalyst for SoFi. SoFi's got a great product. It's really, really good. They've got verticals to move a customer from SoFi Invest over to SoFi Credit Card, so they don't have to spend as much on marketing and sales. A really, really nice product. And I just think that bank charter, and the CEO recently probably a week ago or so, he talked about the bank charter, and he talked about the positives that the bank charter would provide to SoFi, and how the bank charter would provide ways for SoFi to actually cut some costs as well, while it was able to also use it for ways to earn more money. So I thought that was interesting. There was a little bit of selling the news going on when the CEO started talking, but there was nothing negative about a bank charter. He did not say that there was not a bank charter. Just talked about the bank charter and how positive it would be for the company. So yeah, that's that. Okay, long term, it's a winner. Yes, definitely long term, it's a winner. They are going to have the future 1% on their books. Yeah, I think so. I definitely think so. This is one where, for me, I dollar cost average this one, constantly building out the position on this one. Short term RSI is at 24, so right now it is oversold, but there was, goodness, double the amount of volume today of normal. Volume was 64 million on average volume of 34 million, down 7.5% and up 0.79% in after hours. So there's a little buying the dip there in after hours. A good one to sell puts on. Yeah, yeah. But it's reaching it's reaching an area here for me. There's this zone for SoFi. Let me see if I can get this chart up here right. There's this zone for SoFi. Between 1550 down to 1475. There's a zone in there of support for SoFi. Now, I think it's one of the more stronger zones for SoFi. And if it breaks that, then it would go down to 1350. But there's a strong zone that it's in right now that could maybe put the brakes on it right now. There are a lot of touch points on this zone. Again, that's 1550 down to 1475. And today it got to a low of 1462, and it closed, well, it got a high of 1644 and a low of 1462, closed at 1519. So there's good support in this zone right here for it. But if it did break this zone, that's when it's going to go down to 1350. And then if it broke that, man, it would go to 12 for sure. But right now, it's got a good zone. I'm selling the 14. Hopefully, AI catch a good dip. Go for it. Yeah, that's all good. Okay. Let's see. Of course, questions are most important. I did want to talk about Docusign. DOCU. All right. All right, Docusign. Let me just run through this. Okay. Docusign, big fall today. All right, let's go on this one. All right, Docusign's ticker symbol DOCU. They dropped 42.2% today, up 0.1% in after hours. This thing is still, the RSI is at 43.8. It's not even oversold yet. Looking at the RSI, that is just incredible. Oh, my apologies. I had the cursor in the wrong place. Just made a mistake. RSI 22.26. Okay. All right. Docusign, ticker symbol DOCU. It dropped 42.2% today. It's up 0.1% in after hours. The RSI, or relative strength index, is oversold at 22.26. Man, did it fall today. Your thoughts on, is that a Z and an S? Yeah, I'll put them in here. I'm very positive on Zscaler. And if you go and look at our videos, I'm pretty sure, I'm 99% sure that there's a video that you can watch that is specifically about Zscaler. I'm very positive about Zscaler right now. Their earnings they just reported were really good, I thought. They're sitting right there on their 50-day moving average, which is positive. Now, they were in this trading channel here, and they had gotten a little bit high, a little bit too high, and they used their 50-day moving average when they sold off. Maybe it didn't come quite down to a 50-day moving average, but it came close. And then it had a nice bounce. So what did it see? It dropped 8%. I mean, this is one of the ones where yeah, I got in at 325. Oh, 315. Okay. 315. Yeah. See, its 50-day moving average right now is at 311.97. Call it 312 is where its 50-day moving average is at right now. It used that as support. It did dip below that today, but it closed above that 50-day moving average, which that's a positive sign still. But the biggest thing about Zscaler right now, and there's kind of been a theme in today's live stream where you can have good companies report good earnings, but they still get pulled down because the overall market is pulling them down. Zscaler is one of them. They had an excellent, and I mean excellent, earnings report. But what happened to them? They sold off on their earnings. And I've been calling that the past couple of weeks the Target effect, because Target was one that came out with great earnings, but they sold off as well. So this target effect thing that I've been calling the past couple of weeks on these live streams is kind of what happened to Zscaler too. I mean, their earnings were just wonderful, and they guided to the upside for next quarter and for the fiscal year. So I've got nothing but positive things to say about Zscaler, but definitely go check out that video for Zscaler, and I talk about everything. I try to keep my videos 5 to 8 minutes long, so that way you don't have to spend a whole bunch of time watching them. I get the most important information out as quickly as I can, so that way you can get that information and you don't have to take 20 minutes to watch a video. Anyways, Zscaler looks really good. Let's see what's this here. I like DOCU, but seems like large cap tech could push them out at any time. Let's see, because of high valuations. Worried about Facebook. Not sure how low it can go. Yeah, we talked about Facebook earlier. It can definitely go lower. Let me just plug Facebook in here right quick. Zscaler should be going up, but the overall market can pull it down. Yeah, see Facebook here, it had great support at $324, but of course that support wasn't enough because the overall market is selling off. And when it does that, it'll bring companies down with it. Facebook is a company that makes a lot of money. They've got good margins, but the next support area for Facebook is $300. That's the next place. If it falls below $300, then you got to go down to $285 to find support. But this $300 mark, it's going to be I think it's going to be a pretty strong area of support for Facebook, because there's quite a few touch points for Facebook at $300. And today it got down there and bounced off of it. It got to a low of $299.50 and then bounced back up to $306. So I think that $300 is a very strong support line. However, as we saw at the 324 support line, it's not a guarantee, but there is good support at $300 for Facebook. Once Facebook too, it'll probably have, I don't know, it'll probably pinball around for a couple quarters. It's got to get its identity back. And this new identity people are unsure about. I did a poll on my YouTube page, and the majority of everybody who answered that poll, they seem to like the direction that Facebook was moving in now. They like the name change. They like the name. They like the direction Facebook is going, to the metaverse, to Web 3.0, to the next iteration of the internet. And I think it's going to be a pretty big deal. But Facebook has got to get through its identity change before it's going to start, rallying for a longer than a day or two, or longer than a week even. It's got to get through its identity change. So that's what's up with Facebook. $300 is a support. In mode is bouncing off support. Yeah, in mode though, it's starting to its structure is starting to change a bit. In mode is becoming more bearish, I'm afraid. This zone right here that I had for in mode in the support line down here about $68. It did get as low as $68. I'm sorry, $63.15 today, but it did push back up above that $68 mark, and it closed above it. That was good to see. However, I think this is now starting to form a more negative, bearish structure here on the chart. I believe it's going to go down to its 200-day moving average, and then I'd like to see how it handles its 200-day moving average. Now, if we look at some of the other indicators here, if we go from earnings, we can see that, oh, wrong thing. I need a line. We can see that since earnings, volume was falling off. But of course, then we had some really high spikes in volume for selling. We can also see that since just after earnings, the peak after earnings, it had a nice 3-day run up after earnings, and then it peaked. RSI, the Relative Strength Index, is also in a downtrend. So these different signs are pointing to in mode, as there's still room for it to fall. Even though this support level of $68 is pretty strong, I do believe it's going to continue to fall. And it's had a nice run up. What is it year to date now, even with this fall? Even with this fall, it's still up 186% year to date. But I really believe that it could come back down to its 200-day moving average. And its 200-day moving average right now is inside this shape, this little square circle thing. All right, that's where it's at. I think Meta is a winner, but I also think good partnership will be key. Yeah. Facebook will be one of the last ones standing. Whether you like him or hate him, Zuckerberg is a very smart dude when it comes to computers, and he can definitely build something. He's got the vision. He's got the vision, that's for sure. All right. Well, we can keep talking about what you guys want, or I'd really like to get into Docusign, but that's okay if we don't. I can save it for another day. Okay, I'm just making sure I don't miss any of your comments here. Yeah, going back to that question there, I like DocuSign, but it seems like a large cap tech could push them out at any time. That is true. That is true. There's actually a smaller company who is just getting into e-signatures. All right. Well, I'm going to go ahead and jump into these couple of DocuSign here. And so we got DOCU. All right. Remember, if you do have a question, just leave the ticker symbol and the question in the comments, and we'll go over it live during the show. Okay. Docusign, ticker symbol DOCU, it fell 42.2% today. It's up 0.1% in after hours. RSI on Docusign right now is 22.26. It is oversold. Docusign got docked massively today after the company missed its prior billings guidance for Q3 and forecasted a significant drop-off in revenue growth for Q4, which would be reported in January. Trading at a frothy valuation of 21 times fiscal year 2022 sales heading into Q3, the cloud-based electronic signature provider was facing lofty expectations. Given how hawkish the tone was set by the Federal Reserve earlier this week, which has sent many growth stocks with high valuations such as Docusign, lower. Nevertheless, although shares were trading about 25% below where they were after the company delivered impressive Q2 earning results back in July, their ending in July earnings report in early September. The combination of high multiple stocks losing steam lately with Docusign's billings miss and lackluster Q4 guidance was the perfect storm to send the stock off a cliff. This isn't to say that Docusign was without any bright spots in Q3. For example, its adjusted EPS of 58 cents represented 163 growth year over year and was more than enough to beat estimates by double digits. Total sales also came in pretty strong, jumping 42.4% year over year to $545.4 million. Again, topping estimates handedly. Non-GAAP operation margin also expanded nicely on a sequential basis, growing 300 basis points to 22%. However, those bright spots were not nearly enough to overcome the primary issue Docusign encountered this quarter and its hurdles going forward. And remember, one of the best ways to sum up the whole stock market is that stock's price today is based on what the stock is going to do in the future, or the company is going to do in the future. That's today's price. So if tomorrow doesn't look good and it looks like they're not going to make as much money, then today's stock price will drop. And that's what happened with Docusign. Now, the biggest issue in Q3 was a significant slowdown in billings growth, which grew just 28% year over year to $562.2 million, falling well short of Docusign's prior forecast of $585 to $598 million. To put this into perspective, total billings have yet to grow by less than 40% year over year since the pandemic began. and have never been below 30% since Docusign's 2018 IPO. Perhaps investors could have shrugged off this over-given or off-given, a one-time thing, right? That Docusign was lapping really big growth from the quarters from last year, in which its billings shot up 63% year over year. However, DocuSign's Q4 billing guidance of 647 to 659 million represents an even greater deceleration of 22% year over year, despite lapping a much more favorable number than Q3 of just 46% billings growth in the year ago period. DocuSign attributes the significant deceleration in billings growth to slowing demand as customers become less urgent in transitioning their business to offer e-signatures. It may not be a surprise that DocuSign's business would slow some as the pandemic's grip eased. However, the pace at which market dynamics shifted was much higher than DocuSign anticipated. With shares trending towards June 2020 price levels, the sell-off today might seem like an overreaction. However, DocuSign's plans to increase its global sales capacity while driving brand awareness along with continually investing in product innovation do not appear to be enough to alleviate the major concerns from Q3. Bottom line, I think the e-signature industry is still in its relative infancy. The adoption should likely continue as companies engage in digital transformation, which we know from other companies like Splunk that the digital transformation is happening. However, the pace at which DocuSign added new customers and expanded upon its existing base during 2020 and halfway through the year 2021 set the bar sky high, making it challenging for DocuSign to live up to expectations moving forward. Because of that, I think it may be best to wait and see on DocuSign, as it still trades at a relatively rich valuation of 14 times fiscal year 2022 sales, which could lead to continued selling pressure. All right, so that's my thoughts on DocuSign and their earnings, and of course, the big sell-off. What do you think about DocuSign? Is it a company worth buying this humongous dip on? Or would you rather wait and see? I'm taking a wait and see approach. Okay, in the comments, seems like Microsoft could add a similar product to its Microsoft Teams. What do you think? I think that could be yes. Yes, I do. Could it push... I don't think it'll push them out completely. If Microsoft has a e-signature platform for Teams, excuse me there, I don't think that it would push DocuSign out the door. It would definitely hamper their growth rate. It would definitely hamper their market share capability. It would definitely affect their TAM, their total addressable market, for sure. But I don't think it would be the end of them. But I don't think we would see these humongous valuations on DocuSign if Microsoft came out with its own e-signature platform. And quite frankly, I expect Microsoft to come out with an e-signature platform. whether it is something they build in-house or it is something they make an acquisition of maybe a smaller company who's just getting started with e-signature and is relatively small, has much smaller valuations than Zoom does. Docusign. So yeah, that's what I think about Microsoft. I think they're gonna. I do believe it's a matter of when they're gonna do it, not if. And then are they going to build it in-house, or are they going to make an acquisition of a company that is a bit smaller than DocuSign but has the technology to make it work? That's what I think they'll do. All right. So that was DocuSign. I do need to wrap this live stream up. We've been going for about 2 hours now. Yeah, so I've got to get to the closing for this. I do want to say that for anyone that may have missed it at the beginning, the vision. I want to turn this into a business. I want to hire 2 groups of people. I want to hire journalists for on-the-ground reporting. It seems like right now we get a press release from a company, and then we get a reporter who copies and pastes what's in the press release and then publishes it to Bloomberg or to any of the other news outlets out there. The same thing with what's on TV. When you turn on any of the business networks, there's a press release from the company, and they're basically copying and pasting that press release into their script. I would rather have a journalist on the ground, investigative journalist on the ground, going to the headquarters of the companies we want to invest in. Take Lucid, for example. Send the reporter down to Lucid's manufacturing facility. Have the reporter get interviews from people who actually work there. That would tell us so much more than when a company does a press release on something that they're releasing now. And that's one group of people that I want to hire to make this a functional business that will provide ample value to retail investors. That's one. Also think about the investigative journalist going to the headquarters of Docusign and getting an interview with the executive team. That would provide a lot of value. The second group are researchers. It takes a ton of time to research companies. And to make this scalable, we have to have a research team to do all the research that it takes for these companies. And then, of course, communicating with our investigative journalists who are on the ground at these companies. We could send the drone up over Tesla's lot and see how many cars they have at the first of the month each month. Take a picture of that. That would be interesting information. And all of that information and then all of that research would help with us building investment theses for these companies that we want to invest in. So those are 2 big things that I want to do with what we have here. I know we're starting to build a base here of investors, which is wonderful. But in order to hire that talent, that's going to take some money to do. And I'm willing to put skin in the game. And I will put skin in the game. But one way that you can help to make this a reality is click the first link in the description, and that'll take you to our Patreon page. And we've got many different tiers to choose from, and we have more tiers that we're going to put out probably this weekend to give everyone options. I'm also going to change the name of the tiers to reflect the vision of where we want to go with this. So that would be what I mentioned at the beginning of this video. I feel really passionately about this, and I've started many companies before, and it's a good feeling when you know what you have will work, and when you know what you have will provide a lot of value. So yeah, just a couple quick thoughts there to share with you, just so you know. Okay. Oh, no worries. No worries. Glad you just got here. Do you have the ticker you want me to look up before I go? I can do that. Most certainly. But yeah, I definitely want to. I mean, can you imagine sending a reporter to Lucid's factory and taking pictures of the lot, seeing how many Lucid Airs are sitting out there? You know, every month having a new picture from a drone flying over. That would let us know how production is doing. And that would give us a lot of insight to how the company might be performing. So just some ideas there for what I want to do with this. So, and let's see. Yeah, that's out there now at Shanghai. Drone footage of parking lot stand full. Yeah. Yeah, you can find certain things out there. I will definitely say that. But doing that in combination with the investigative reporter going into the headquarters and getting an interview with the executive team in combination with that, that would provide a lot of value, I think. Definitely. You got SS. I don't see a name, just SS. Do you have a ticker you want to look at before I go? Can definitely do that, and then I'll wrap the stream up. Otherwise, I'll see you. Two things to note: Sunday evening Catalyst Watch video comes out every Sunday evening. Talk about the what's coming up this week, what stocks to watch, why to watch them, and what to watch for. Some of them are for stocks that could move up. Some of them are for stocks that could move down. So we go both ways with the stocks that we talk about to make sure that you have the best information going into the week. You want to look at HUT. So HUT 8 Mining. I do hold HUT 8 Mining. Ticker symbol is HUT, HUT. Now, they reported their Bitcoins mined yesterday, and I believe it was on the smaller number. Yeah, 265. So they mined 265 Bitcoin in November, which is 8.83 Bitcoin per day. So Hut 8 strategy. Now I like Hut 8 out of all of the mining companies. I like them the best. Now Hut 8, they are holding their Bitcoin. They are not selling their Bitcoin. They deposit it into custody, and they have a HODL strategy. Their total Bitcoin balance in reserves right now is 5,242 Bitcoin as of November 30th, 2021. So they've got some Bitcoin there. Let's see here. The company provided its mining update for November. Yep. Okay. Okay. Average. Okay. Other crypto exposed names underperforming today include Riot and Marathon Digital. Yeah. But even though these mining companies, they can look real good. If Bitcoin goes down, they go down. If Bitcoin goes up, they go up. So for me personally, I hold Hut 8 mining. I like Hut 8 mining. I like it under $10. I like it a lot under $10. But when you're looking for support here for it, you're going to have to go a little bit lower. There's a little bit of support at about 860, probably being on the high side there. Draw a line there. 860. Looks like there's some support there. Going up where it's already come from, there is some support around that $10 mark, but it's not much. I'll put a line there. There's not that much support there. So you got that zone right there. Hut 8 mining, thanks. Yeah, Hut 8. You like it over Riot? I do like it over Riot. I do, because I like the setup. Yeah, I like Hut 8 mining over Riot, yes. Now, Riot mined more. They mined more Bitcoin than Hut 8 did. But Hut 8 uses, I do believe, 100% clean energy. So once we get crypto worked out, whereas bigger investors can go to their departments, their legal department, their compliance department. I don't know if you've ever listened to any interviews by Mr. Wonderful from Shark Tank, but he invests in Hut 8 mining. And he's talked about crypto before and wanting to buy crypto, but his compliance department, legal department, nope, won't let him do it. Because he wouldn't be in compliance if he did, and that's a no-no for him, he says. So there has to be some sort of fair regulation that does not inhibit growth and technical advances in the crypto space. And then bigger investors who are just sitting on the sidelines wanting to invest in crypto, I think that they would then invest in crypto. And once you get the big money investing in crypto, then what's the price going to do? Well, it's not going to go down, that's for sure. It's going to continue to go up. So, yeah, there has to be some fair and clean regulation for Bitcoin that does not hamper growth and technological advances, so these big players can invest directly in Bitcoin. I do believe, if I'm remembering this interview correctly, when Mr. Wonderful was talking about investing, his compliance department would not let him directly invest in Bitcoin, but he could indirectly invest in Bitcoin by investing in a company like Hut 8 Mining. He does invest in Hut 8 Mining. He also is investing in a company that does NFTs, and I cannot think of the company's name off the top of my head. He's got a big watch collection, and he wants an NFT for each one of his watches, and to sell those NFTs, but still be able to keep the watch. So yeah, he's very involved in the crypto space, and he's had a lot of smart people around him talking to him about crypto, and just listening to some of those people, it's very fascinating. So that helped shape my investment thesis and thought on the whole blockchain crypto space, is that there has to be a fair regulation that doesn't hurt or hamper digital growth and technical advances and so forth. How often do miners issue new shares? Well, that all depends on the company. They don't really. When a company goes public, they issue X amount of shares. Now, if the company does good and a lot of people are investing in the company, the price will go up. At that point, when the price goes up, then the company can do a stock split, where one share now becomes 2 shares. What that does is put more shares on the market, and it lowers the cost per share. That's one way. The second way is if the company needs to raise money, the company can do a share offering, where they're going to put, let's say there's a company that has 100 million shares on the market, and they're going to put another 100 million shares onto the market. Well, now your one share that was worth $1, because of this share offering, your one share worth or valued at $1 is now valued at 50 cents. It's a dilution. It dilutes shareholders' value. Companies only do that if they want to raise money. So it's not something that they do all the time. It's done rarely. And companies can also do buyback programs. Like Zillow has initiated a buyback program where they're going to buy their own shares, and that's going to take shares off the market. And that's going to help to increase the price. So companies don't typically just put more shares on the market. Wouldn't they have to sell their Bitcoin to buy back shares if they ever do? As a shareholder, I don't see their value. Okay. Their value comes from holding Bitcoin. The more Bitcoin they hold, the more valuable they become. The more the price of Bitcoin goes up, the more valuable they become. So they have Bitcoin miners specifically have a very strong correlation to the price of Bitcoin. Because if they have 100 Bitcoin and Bitcoin cost, let's go back to the old days where Bitcoin cost $1,000 and they have 100 Bitcoin, then you know the value of that, right? Okay. If the price of Bitcoin goes from 1,000 to 10,000 or to 50,000, then your money has 10x, has 15x, has 50x if it goes to 50,000. So because the miners hold that Bitcoin and the price of Bitcoin fluctuates up and down, the share price is going to fluctuate up and down too. There's a lot of volatility in miners' stocks. Do miners receive interest on the coin they hold? Sometimes not. It depends on who has custody of the crypto asset. It's not like a miner will open up a BlockFi account and put their crypto in BlockFi to earn interest. It just seems it just seems like you're just as good, if not better, than just holding Bitcoin. Yeah. So the difference between holding Bitcoin and holding stock in a Bitcoin mining company is because there are some people, especially institutional investors, who are not allowed to invest directly into Bitcoin. This, having Hut 8 Mining, for example, be a stock that you can buy, allows these people and institutional investors the opportunity to invest indirectly into Bitcoin. That way they don't break any of their compliance rules. Their lawyers don't get mad at them. And this is for, higher worth individuals who have compliance that they have to follow, or institutional investors who have a whole compliance department that they have to answer to. That's really, for a retail investor, it's better to hold Bitcoin than hold a share in a mining company. Yeah. Now, there is the argument that, well, what if not all miners, there's the whole ESG angle of it too, which gets a lot of fuss and it gets a lot of noise, where people are, they don't want to invest in Bitcoin because they think it's dirty or something, right? And they want the mining companies to use renewable energy. Well, Hut 8 Mining, if I'm correct, they do use renewable energy 100%. So again, for people who are into ESG, that's just one way for them to get around investing in it. Okay, thanks. I really don't know anything about miners, so thank you for answering my questions. You're good. You're welcome. I am glad I was here to do that and answer your questions. All right, well, we've been rolling on this live stream now for 2 hours and 20 minutes, so I'm going to go ahead and cut it off. Remember, Catalyst Watch video comes out on Sunday evenings. That's the most important video I do all week. It is a live stream. Again, Sunday evening, watch for that video. Also, I'll have several videos out this weekend about varying topics, varying different companies. So make sure you're subscribed for that. like this video, share this video. That is something incredibly helpful. And also click the first link in the description below in the down there in the description, and become a Patreon member. That helps to support our research, our analysis, our technical breakdowns, but it also has perks for you. So check that out. And that's also going to help fund, and I'm going to kind of restructure Patreon this weekend and change the names of the tiers and add a few more tiers, because we're going at this like a business. We are going to set this up as a business, legit. We already have an LLC for it anyways, so we're just going to go with it. We're going to hire investigative reporters so we can get the questions and interviews with our the executive teams from our favorite companies, and more researchers. Those are the two groups of people that we're going to hire to make this the most valuable place to get information, and not just on the companies that everybody talks about, on the companies that we as an investing community care the most about. So make sure to do that. And yeah, I'll be working on some more content for you guys. And with that said, I will wrap it up. Thank you very much for the $3. I greatly appreciate it. Thumbs back up to you. Have a wonderful weekend, investors. I'll see you in the next video.